Hello and welcome to video number 4 in a series of videos designed to demonstrate how to use the Fractal Suite in the Bloomberg trading platform. In the last video we left off with the parametric channels and also the last indicator that lays over the chart itself. So now we are going to move into the other unique indicators and oscillators that are found in the Fractal Suite. And the first of these is plotted in panel number 2, which is underneath the chart. You can see where my pointer is at here from the mouse that this is panel number 2. And the name of the indicator that is plotted here is the attractor repulsor coefficient. We also refer to it as the ARC, or the ARC for short. And what this indicator is designed to do is measure a state of attraction between the last traded price and the predicted close. So rather than explain it in detail, what I will do here is demonstrate it and show you on the screen. So first let's go back to our settings drop down menu here and scroll down to, well, first let's set 0. The 0 line is universal across the oscillators and indicators in the Fractal Suite template. And then what I will do here is check arc marker and plot the arc. The arc markers are arbitrary. The default is 0.3 and negative 0.3, as you'll see. And essentially it's just a constant that is used to measure the 0.3 marker level against the arc value. And you can change this to whichever number you like. Now the value of the arc will fluctuate between +1 and -1. So the meaning behind that is that if the number is positive, it is indicating that the price and the predictor are in an attractive state, or state of attraction. So that would mean that if price were at a certain level on a bar and you notice that the predictor was at another location, that the higher the value, positive value of the arc, that would suggest that price is going to revert back to the predicted close. The opposite is true if the number is negative. So judging from that, you can use it in a number of different ways, particularly when you're using a predictor reversion strategy. So if we zoom in on this a little bit, maybe you can get a better understanding of what it's doing. And you see here that it's fluctuating between a positive number and a negative number. Now the sensitivity of this arc can be adjusted as well. Currently I have the observations for the arc set at 3. The default is 10, which means that it's looking at 10 different observation points. The observation points consist of the closing price of both the both of the instrument or the market that's being traded and the predictor. So here the default is 1, so it's looking at, each observation is going to be 1 price point, and we're going to be looking at 10 of those for the calculation. Then we have the arc marker, which to demonstrate I will change to 0.4, and those are the 3 inputs that are used to calculate the arc value. So I can go ahead and update this, and now you'll see that the arc values have changed. So let's zoom back in. And what this is suggesting is that during these phases where we have this positive range here, that the price is actually attracted back to the predictor. The opposite holds true when the arc value is negative. So let's go ahead now and add the predicted close so we can get a better understanding or view of what is going on between these two instruments in the marketplace. Okay, so now we have the close on the chart. And what we can determine from this is that based on those 10 observations, that when this range is in this positive, when the arc is in this positive range here, we can say that the price, last traded price of each one of these bars is actually being attracted back to this predictor value. When it's in this negative state here, the predictor is repulsing, if you will, the price away from it. So this is the way that you can gauge whether or not you should enter a trade if you're using a reversion style strategy, or you can also use it for placing a trend trade if you're looking for moments where the price is actually escaping or moving away from the predicted value. So let's just, before we conclude, run through a few different variations. So as we mentioned before, we have the observations for the arc, which is the number of the observations that are here, and in each one of those observations is the number of price points. So we can change this to 3. Let's change this maybe to something significant so you can see a broader change, 20 maybe, and see what happens. So once again, we get a slight variation on the reading, and as a general rule, the greater the number of observations, the more data that's being analyzed. So it's usually going to measure a larger amount of a move. So if you're looking for instance, to be in and out of a trade quickly, particularly if you're trading, say, a predictor reversion style trade, and you want to enter the trade off of an entry channel and get out as quickly as possible, you may want a shorter amount of data to be analyzed for the arc value. That being said, we will conclude this video and move on to the arc trend in the next video, which is used to measure the range state or trend state of the current market, and it does this by comparing the last traded price to a previously known historical price. Thank you.